Alright guys, welcome back to MMGinvest. Let's do a quick update on the markets and the economy, everything that's going on. I've been sort of MIA for a while. I'm having issues. So, here's gold. I'll talk about gold in a second. Let's just go to the markets. Right now I'm thinking about some. What have I forgotten? I've forgotten something. We'll find out as I go through this video. First of all, stocks, equities are extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. I'm not always right. I could be completely wrong. It's more of an educational channel about the economy and on how to trade. Alright, so stock market, it's been selling off in the recent couple weeks, which is great, right? I haven't exactly put on my short again. I am short individual stocks, not indexes. And I'm just going to talk about the macro, what's going on. Here's the gold ETFs. They've been pretty destroyed in the past few weeks. So is the price of gold. Here's the European financials. Deutsche Bank is in trouble again. Deutsche Bank is essentially I'd consider it like a pension fund at this point, where it's just propped up. Well, not a pension fund, but like a state-ran. It's like Lehman Brothers and Fannie Mae and Freddie Mac, right? The central bank in Europe just pretty much prints money and props up that bank, and now they want to do more mergers, and it's gonna just turn into some systemic risk across the entire European banking sector, especially Germany's, which will take down the euro. We also have Brexit going on, right? Theresa May just cried on camera and resigned because it was so bad. I expect Brexit to actually happen now, and for the long term, that's great for England, the United Kingdom, and for Europe as a whole, because European Union is more likely to break apart, and it's been like 3 years in the making, and that's good. It's good for Europe and the UK. The faster that the European Union breaks apart, the better. Will there be turmoil and great shorting opportunities on the euro? Yes. Will there be volatility, this and that? Yes. It's also, as Europe, as the EU breaks apart, it'll be good for the US stock market, in my opinion, because capital flight will probably go into the US stock market. Here's Nasdaq 100 E-mini futures. Not even sure why this is up. It's on support now. S&P 500. Here's the SQQ, an inverse ETF to the Nasdaq. I traded this earlier, took some profits. I might put on another position if we have a continuation of a sell-off in equities for the next few weeks. It could rally a bit more. That'd be a great trade. But it's looking pretty good. Here's Nasdaq weekly chart. So I feel like wherever the Russell 2000 and the Nasdaq go, the rest of the markets will go. We're coming up on a 8 count, so 9 count on the weekly. So I am expecting a continuation of a sell-off to possibly revisit, what is this? The 100-week moving average should be around $84, somewhere around there, by the time this sells off. But that would incline that we get a sell-off for a while, for at least a month or 2 months, like many weeks. RSI, all the oscillators are overextended on the weekly for the Nasdaq. So I expect more of a sell in May and go away situation. And that's perfect because the Fed's gonna, well, I'll get to that in a second. Let's take a look at the Russell 2000, see if that how does that look on the weekly. Here's the weekly on the Russell 2000. We have 3 candles trading below one another. They're even red. A countdown, a 3 countdown. So I'm expecting a 9 countdown to the downside, taking us again to the, well, this would take us on the Russell 2000. It could take us to the 200-week moving average, down around 1,400 area, and then or maybe even lower. We'll see, but there's also the 23.6 fib retracement, 38.2 down here, and then we have another fib retracement from this low, from this previous low. A 61.8 or a 70.6 would be ideal for a nice retracement or correction, really, from this rebound. And then possibly sideways action for the rest of the year. And then in 2020, the stock market will probably melt up and go to new all-time highs in 2020. Just because elections and the Fed's going to capitulate and they're going to cut rates and maybe do quantitative easing. And then we'll get the stock market going to all-time highs and having a blow-off top. That's what I'm speculating. Can we have a black swan event where it just all dumps? And yeah, that could happen at any time. But this is what I think they want to do. They're okay with the stock market pulling back and then trading sideways for the rest of this year. And then in 2020, sometime, possibly in the spring, you're going to start seeing a melt up because they're going to cut rates. And possibly, they're already talking about, I forgot who wrote it. Was it the International Monetary Fund? I'm not sure. One of the big, Ivy League elitists in the central banking sector. They're already talking about trying to manipulate long-term rates, not just short-term rates. So they're gonna cause a melt up in the stock market. That's where all the inflation's going. They keep saying, well, there's no inflation in the real economy. There isn't, let's say, it's not that bad when it comes to food and all that, although it is bad. It's just slowly happening. It's just that all the inflation is going into the stock market and pumping it up and propping it up. Eventually, prices of homes and cars and the stock market, it's going to correct someday. The day of reckoning will come. I don't know when, but they just keep playing this game. And they're going to keep playing it as long as humanly possible because they can't let the stock market crash. And that is because pensions will implode. And so will Social Security. All of these unfunded liabilities, the government, all the free shit the government promised for the public, they can't pay it out. And the pensions, they need like 7% return ROI every year to stay in the green. And the only way that's possible is if they keep printing money and making the stock market go higher. So if the stock market crashes, the pensions blow up, then the states blow up. And then all of the entitlement programs for the baby boomers who sold out our future blow up. And then the housing, houses will crash. And it's just a full-blown, it's like a giant bubble with a bunch of mini bubbles inside of it, and it's systemic. So they can't let it go down. So they'll do whatever it takes. I'm talking they'll probably have ZERP or negative interest rates like Europe does, the US will, and then they will just keep printing money like Japan does. In the end, I wouldn't be surprised if they'll even buy stocks. If the Fed buys stocks, Japan's central bank owns like half of the stocks on the Japanese exchanges. So what does that do? So what's the end game? Well, it would be better if everything just freaking imploded, because it's the only way you could go back to normal economic growth. The 3% growth, it's a lie. If you adjust it for inflation, it's much less, if not negative. So if they're successful with their games, we'll just have what's happening right now will continue. Inflation will creep up slowly but surely. The standard of living will keep falling. The middle class will get robbed through inflation, right? And very slowly but surely, everyone will just keep getting poorer. And the economy will just keep deteriorating slowly as they keep propping everything up. All right? I mean, these are my thoughts. Let's take a look real quick at the Fang stocks. This would have been a great short, the Fang index. I've just been, I've had some serious issues, family issues, so I haven't been able to pay attention in the recent weeks. Man, look at the Fang stocks just crashing. Facebook looks bad. I know they're coming out with their own cryptocurrency, but that's just a sign of desperation. Netflix, all of them, they just look bad. Alright, let's take a look at gold. This is what a lot of people really want to hear about. So my blue line, this is a weekly chart. Yes, it's literally at the point on this weekly chart of the 200-week moving average crossing above my blue line. Last time that happened was in 2002 and went into a decade-long bull market. Also, the TD is giving me a buy signal. It gave me a buy signal 4 weeks ago. Price is still above that buy signal, which was at 1,260. RSI extremely oversold. All oscillators are pretty much overextended to the downside on the weekly, so the only way they could go back up is back up, right? So I'm expecting some upside potential on gold here, on gold futures. Let's just take a look at the monthly real quick. So there is resistance, right, at 1360, 1370. That's why I keep saying once the price breaks above like 1,370, we break above the 100-month moving average, and that's pretty much the last sign of resistance and then the gold could start running up to like 1,600 real quickly, like real fast. And that's when the mining stocks will take off. But looking at the weekly here, that looks positive for now. Let's go to the daily. The daily, I mean, we've been testing my blue line here. Let's hope it doesn't break below it. We need to stay above 1260. The longer we stay above 1260, the more likely we're going to break above 1300 again and then finally break out. This technically can be a bull flag. Also, the oscillators are all oversold. So this looks like a bull flag to me. See this? And then here we go. This is a bull flag. And once the price of gold, I mean, you could test the bottom of this range down here somewhere. But I expect a breakout in the coming weeks. Maybe it'll trade down slightly sideways into June, July this summer. But by the end of fall, somewhere around fall, boom, it'll break out. Especially if the stock market keeps selling off for the rest of this summer, because eventually the Fed's gonna capitulate, right? So this is what I expect on gold. So go to MMGinvest.com. Look at that video. That's what I have for my research and what to expect. You guys could look into my research on gold mining stocks. Now, I could be wrong on my research. It's to help you with your own research. It just helps you with your own research, all right? So do your own research after you buy my research. Okay, so I wanted to talk about this for a second. This is the MMGinvest free chat group. So on the other YouTubers were talking about this. This was done by what's his name? I forgot who made this chart. I want to give him credit. Well, if you just look up economic confidence model, the sixth wave, his name will pop up. I forgot his name. Anyways, huge macro cycle, right? Cycles, Fibonacci cycles. The public sector, then the private sector, the public sector, private sector, public sector. Right now we're in the private sector. And these cycles are basically the public sector goes into a bubble, and then it implodes, and then we get socialism, communism. And then communism and socialism fails, that implodes, and then we get free market capitalism again. And then that creates a huge bubble and then implodes. And the cycle keeps going over and over again, right? And we're really overdue. Actually, the next one's due at 2032, so 2032. That's when the peak private bubble has peaked out. And can they keep the printing presses going and create the biggest bubble in human history with the private sector? I mean, we already have. We already are in the biggest bubble. But here's what I think is going to happen. And actually, Tone Vase said this, and I agree with him. I think the private sector and the public sector is going to implode this time, and the world's never seen anything like that. First, the private sector will implode, the stock market, and then the corporations, and then the government's going to implode soon after. And then we'll go back to like some sort of very decentralized anarchy type thing. I'm hoping. But we're due by 2032, and he's been doing this for decades and decades, studying macro cycles. So, birth of capitalism, political revolution back in 1774. That was the end of that. So 1700s, and then the 1800s was commerce, textiles, iron, water power, mechanization. 1878 was steam power, railroads, steel, and cotton. 1930s, right? 1929, the Great Depression. That was internal combustion engine, electricity, chemicals, and assembly lines. And then public until the 1980s was petrochemicals, electronics, and space travel. And then the private sector is globalization of economy and the internet. So yeah, we've been in the globalization phase since the 90s, right? And the internet, the tech bubble. What's next here? Economic cycles. You guys can look at this more in depth if you go into the... It's in the description below this video. The link to this MMG free room where we share ideas, talk, basically. Okay, so economic indicators, recoveries, and expansions. And here are just macro charts. and we're this one only goes up to 2017. We're about to hit 2020, so we're overdue for a next recession. The curse of cheap money. This is a great chart. 1987 Black Monday. That was fear of the bond market and inflation. Currency, in one day, the stock market dropped like a huge percent. I wasn't around. I forgot how much. It dropped by over 22%. Currency uncertainties, fears, and recession caused the Dow Jones to drop by over 22%. If the Dow drops over 22% in one day, man. If that happened today, I feel like everything would just go to complete and utter crap. Like, would it be in a multi-year, maybe decade-long recession? Russian financial crisis. You guys could look at this. I don't want to make this a long video. Oh, this is stupid. Oh, it was Martin Armstrong. So, rise and fall of empires and nations and city-states based upon energy output of the this is stupid. This is weird. But I just found this chart and it's funny. The Fed rate adjustments and economic growth. I can make videos based on just each chart we're looking at right here. But you guys could look at this. It's fun stuff. So we are here. Current revolution, 2018 to 2023. So these are macro trends of revolutions. And you could say once the economy really goes, or people, just like France. So currently we see in France and, you know, Europe, there is mass civil unrest starting to pop up. So I think France is the beginning, and we're going to start seeing more of that globally. Because, you know, people's fiat currencies is not going as far as it used to. People can't make ends meet. They can't even live paycheck to paycheck anymore. And that's because of central banks and them propping up everything through money printing, right? It slowly happens. People don't understand why their standard of living is falling. People don't understand why they're no longer in the middle class. It's because it's money printing. There's a reason why 4 decades ago, one person could sustain a family. Now you have the mother or the father working full time, and you still can't get by, and you're in debt. You're in massive credit card debt. That's also why student loans are out of this world. Besides subsidies and governments lending everyone money to go to college. Yeah, furniture, college tuition. Oh, this is life spending cycle. So the baby boomers are getting old. They're no longer buying. They've bought their last car, they bought their last home, they bought their last furniture. From now on, they're just very frugal, and most of their money they're gonna have to start liquidating everything, and they're gonna have to liquidate everything for food, right? And for healthcare costs, because their bodies are deteriorating, so they're gonna have complications. They're gonna have to pay the doctors. That's why you see hospitals popping up everywhere. It's like they're preparing to feed off of the elderly dying off. Like parasites they are. Here's the leverage in financial speculation in relation to the economy. It is at all-time highs. That's going to reset when it does. Corporate buybacks. All these corporations buying their own stocks. When their stocks, that's why the government and the central bank can't let stocks fall, because if they do, all these major corporations are going to implode, and everyone's going to lose their jobs, especially the tech giants. Number of S&P 500 stocks trading over 10 times revenue. 10 times revenue. So that's P ratios like out in the stratosphere. Shiller P, here's the Shiller index, the P ratio. 1929 crash was at 32.6. .com bubble was at 43.2. The everything bubble is now, it's at 32.3. And can we beat the .com bubble? Can we actually go higher? Here's the thing. With the .com bubble, you literally had like just .com, pets.com, right? And they weren't making anything, and it was just a huge speculative bubble. Right now, we also have a speculative bubble, but right now, it's starting to lose steam because all these new IPOs like Uber, Lyft, and all the others, they're not doing well. So we might not even make it past the 43.2, but we are past the 32 point. I mean, we're coming up on the 1929 crash PE ratio. S&P Composite Index regression to trend. This is where we are. We're way past the equilibrium line, and eventually it always returns to it. And we're gonna return to it and go below it, like we have in the 1980s, 1949, especially in 1932. We're probably gonna have a worse scenario than the 1932 Great Depression, because this one's gonna be global. So no one's gonna be able to pull anyone else out of the hole we've dug ourselves in. Total real return of $1,000 investment with data curse the Robert Shiller. So $1,000 is not going as far as it used to. So, you know, it was different if you invested it like in the 1930s and held it for like 20, 30 years. If you did the same thing now, you would not have the same real returns. That's because productivity in the real economy is not as strong as it used to be 100 years ago. Our innovation isn't as great as I mean, there is innovation, right? The problem is resources and the type of innovation. I mean, the innovation of creating the car for the first time and creating assembly lines, it's not, we're not innovating at that level. We're just creating flat screen TVs and websites and crap and cloud servers. Now, can we have something like that with 3D printing and robots? Yeah, that could boost productivity big time, but then there's really just a lot less use case for humans. I don't know what humans are gonna do, especially with IQs dropping. Also, that brings me to mass immigration. People are like, yeah, well, we need to immigrate low IQ people from the third world so they work, so they produce and they pay into the system so we could have more welfare and our retirements get paid off. That's not going to work out like that, because there's no need for these people. There's huge machines on the farms. Everything's being replaced by algorithms. Your desk job in your office building is going to get replaced by algorithms and AI, and then, you know, robots are gonna, in the next 10 years, there will be robots that are working, right? They could do physical labor. Not just that, you see it in warehouses now. You don't even need warehouse workers anymore. Amazon's completely automated with robots. Importing people into your nation because you need population growth to pay off all of the welfare and entitlements governments promise, that no longer is the case because of innovation. So those people coming into the country are just pretty much going to become criminals, or there's going to be just migrant camps everywhere, and people are going to be robbing you. So there's no need for them. And that's just the reality of things. So, and not just that, the migrants, they're going to go back to where they came from, because when shit hits the fan, they're not going to want to be even in the first world, because things are going to get crazy. Because when first world people lose their money and everything, they're not used to it, because they're used to, you know, their fancy schmancy easy lifestyles. They're going to lose their minds. People are going to be insane. No more like just going to fast food joints getting cheap food. So people are going to lose it. And it'll actually be better to live in the third world nations because people there are used to, hard times. It won't be like chaotic. There won't be mass rioting, and it won't be as dangerous. So you might have, there might be mass immigration back into the second and third world nations. Like, I'm thinking about it personally. All right, so monthly adjusted for inflation, CPI, all times, all items. So here's your inflation. It's going up, guys. And this is from 2018. Based off of, this is adjusted inflation CPI. This is how they used to measure it before they started fluffing the numbers. Alright, so I think that's good enough for now. If you guys enjoyed this video, smash them likes. Leave anything in the comment section. Please share my videos. It's the only way my channel grows. It's the only reason why I will still keep doing this. And go to MMGinvest.com. Check out that video. See if you're interested. Eventually, guys, one day, gold and mining stocks will take off, and they will pay off in a big way. Which I believe. Because, listen, Trump has already tweeted at the Fed, and he's literally crying and begging them to do QE. And we're not even in a recession. He's begging them to do QE. There's also a lot of indicators that are saying that the economy. I'm gonna make more videos later this week, so I'll go more in depth about everything. All right, guys. Until next time.